Hello, everybody. Let's see, it looks like everyone's got their mic on right, marked, muted right now, but if you want to say hello, go ahead and feel free. Hey, Karen.
Hey, how are you?
Doing great. How are you doing?
A little crazy, but I'm okay. Hanging in there.
Nice.
Back in Florida again, emergency trip. So, just trying to keep it all together.
Oh, well,
I know. That's life.
life will throw some curveballs at you sometimes, huh?
Yeah. Gets in the way sometimes. Yep.
How's it going, William?
I'm hanging in there.
All right.
Yeah.
Ernest, how's it going?
Things are good.
Things are good, huh? That's good to hear. Let's see if we got Oscar. Do you have your audio today? We got a chat. Oh, okay. Oscar has his chat on. He's got some background noises over there. No worries at all. Okay, great. Well, I just wanted to start off by asking if everybody had the Friday trade on. And hey, Jerry, how's it going?
Great, Jason. How about you?
Doing good. Doing good. So who managed to follow the Friday to Monday trade? Did you pick up a 270 profit?
I haven't figured it out yet. I had to run out the door and come back in order to be here in time for your webinar. So I'm just getting to it.
Oh, okay. No worries. Yeah. So I'll just review the last couple trades real quick and then I'll hop in.
It's like I did it blind today, trusting you 100%. And I figured, oh gosh, I'll just go back and figure this out later. See, there goes my phone.
Yeah. Well, we're all going to make pretty close to the same. So Friday, from Friday to Monday, we had the SPY go from 288.40 to 292.62. $4.22 gain. We had to give back $1.50 for all the protection with the option caller. So that's a much bigger return than normal, obviously. Today's trade, we lost a quarter. Let's see. Oh yeah, we haven't published today's yet on the web. Today's trade, we lost 26 cents. SPY lost 10 cents. The caller lost. Oh, you know what? I miscalculated that. We lost less than that. We lost 4 cents. So, so anyway, yeah, lost 16 cents, but we're very bullish right now on equities, and today's trade is very similar. I did want to point out a tip for people, though. Let's say that you don't want to stop missing out on income, but on the other hand, you don't want to trade it 3 times a week. If you want to trade, oh, we got Dean in here. Hey, Dean, how's it going?
Great. How are you doing? Good morning. Sorry I was a little late there. I just hopped off a call.
No worries. Looks like just about everybody hit the Friday profit of $2.70 a share.
Nice.
I just realized we misreported the loss today as 26 cents. Is only 14 cents. Not a big deal.
Okay.
Trade's already going our way, about 16 cents. But yeah, I want to point out, guys, so if you ever want to slow down the frequency, you can simply say, all right, well, here's the strikes, and you can push the date to a little further. So if you have to travel, you can do that and still generate the same income. Of course, you're going to make less than if you do all the trades. But in general, that's a perfectly fine way to be able to say you need to take a week off, but you don't want to miss out on a week of income. You can simply set your expiration a little further out. And so that's just a quick tip for folks. I did want to show this slide off. I've tried to make this super simple for everybody. And this is our current recommendation on your total asset allocation. And today's video that we put out, I'll review in today's webinar, really goes over why it's so important to have your assets allocated this way. If for whatever reason you don't want to take the Tuesday trade, then I would put that extra 100 shares into the SPY if you can afford it, or just leave it as some dry powder in cash. I am going to simplify my buy and hold portfolio to only be GLD and Bitcoin at this point. And when I believe the time has come to rotate into the miners for the gold and the altcoins for the cryptocurrencies, I'll tell everyone when that time is. Right now, it doesn't look like it's the time to do that. We need to see gold get overbought and Bitcoin get overbought before we're going to really need to even worry or stress about owning the mining ETFs and the altcoins. So this breaks down to 100 shares in the SPY, and this is per $100,000 you're investing. 100 shares currently plays the Facebook trade on Tuesday. Now, the Tuesday trade, I'm pretty content rotating between primarily Microsoft, Apple, Facebook, and the silver ETF, SLV. And so essentially when equities have had a pretty big sell-off, that's when we will jump into equities on the Tuesday trade and ride it back up. And that'll typically be after a push higher in silver. So expect whenever we see the trade tensions rising, that I'll be playing the silver ETF on Tuesdays. And when we're in a period of easing, typically right after some sort of tensions have been raised and we've had a significant sell-off, that's when I'll rotate back into the most sold off stock that's a top position in the SPY. And so right now, you know, Apple's almost at all-time highs, Facebook's at almost at all-time highs, Microsoft's already almost back to all-time highs. Facebook's not. So Facebook has a huge run-up. I'm expecting them to have blowout earnings, record earnings in Q4. They have some things going for them that I really like. Number one, they essentially have a monopoly in the phone app space. They really dominate the phone app space. There's no one that even comes close. The only app that's even up there that competes is TikTok, some Chinese app. Other than that, they truly have a monopoly in the phone app business. And they're undervalued right now. So they've had a big sell-off. They've had plenty of drama with regulators. And they're also creating their own currency, which can solve a major problem that really fits into our macro view of what's going on around the world, which is simply that governments are addicted to debt. They can't tax the people to pay for their deficits. So they use the invisible tax. They print money. That's why we're seeing negative debt around the world. And that's why I think their project, the Libra, if they can push it through, is absolutely brilliant. So we'll be paying close attention to that. I think we have a nice ride on Facebook. And so currently that's the allocation breakdown of 100,000.
Hey, Jason, I was going to ask you on that. Even if Libra doesn't go through in the United States, do you think it will go through in other countries?
Well, I think it is going to go through. So, but no, I don't think they'll push it through without the U.S. Market. And so here's what they're trying to get past. And other cryptocurrencies have already done this. So that's what I think it will, or they've done something like that. They're trying to avoid being described as an ETF. And so they're using the Howey test to get around that. And the Howey test is that people give you money for the intention of generating a profit. And if they're doing that, then you have a security. And so at the end of the day, all that Facebook's trying to do is take your currency, convert it into the Libra, where now it becomes a cryptocurrency, and that's going to be backed by a basket of the G7 currencies, so the top 7 currencies. But they're doing a lot more than that. They're first of all, they're diversifying your dollar or whatever currency you have into a basket of the top 7 currencies in the world. but then they're hedging against it with the futures market. They're buying bonds instead of just the currency, so they're earning some interest. And of course, when there's negative yields, that doesn't make a lot of sense. But they're doing a lot of things to protect the value of your income. So for your average Joe, this could make a lot of sense, especially if you're in a country where the government's devaluing the currency and you're facing inflation. And in fact, a famous investor was just on CNBC yesterday talking about, it's crazy to hold on to cash because your government's promise to you is that they will devalue the currency. So a lot of people wonder, why on the earth does the Fed want 2% interest, or rather inflation? And that's because if people have the view that their currency is going to go up in value, it's going to cause them to wait to buy things, number one, because they think they'll be able to buy it for less money if they just wait, which can create an economic freeze. And it slows down investment. So really the way these economic systems need to be geared is they need to have inflation so that you don't just freeze up the economic system. And so he was pointing out every 17 years, the dollar has lost about half of its value. So this solution of the Libra is absolutely brilliant. And they can roll it out to something like 2.6 billion people around the world. Something like 1/3 of all people in the world use Facebook once a month.
Right.
So they're just huge. The only thing that could potentially slow them down might be if they were regulated as a monopoly. It's just really hard to prove that they're a monopoly when they give away their platform for free. So yeah, Facebook is, I believe, greatly undervalued, and why we have that in our Tuesday play. Fits into the macro view. Now, the Libra project's been worked on for 2 years, and so they've pretty much already got it ready. They're supposed to come out with it next summer, so now they're just trying to get it through the regulators. And the big sell is, can they get past the Howey test and avoid being marked as a security? If they're marked as a security, they're not going to go forward with it. And I think, yes, they won't do it unless the U.S. regulators approve of it. But a lot of the capital that will be flowing into the Libra is simply going to be buying the dollar. So I think that they can appease all these different central banks. So we'll see. Definitely something to buy on the dip, which is what we just did. And so right now we're flat on that trade in the first day, but I suspect it'll be a nice run. So yeah, that's the breakdown. And to make people's life simple on the buy and hold part, we're getting rid of the minor ETFs right now, because I think first we're going to see GLD go considerably higher. I think we're going to see Bitcoin go from 10.7 up to 20K at least. And then I think people are going to start realizing they need to think a little further down the picture, who mines the gold. That's when the mining companies are going to start to really rally, is after the price of gold goes up significantly. And then the same thing with the altcoins. I think Bitcoin has to get overpriced before it starts to flow over into the altcoins. So yeah, if you guys are still only on the basic program, right now is a really good time to call Dean and upgrade and get a lifetime membership. And you get the whole enchilada, not just the SPY trade. SPY is great. We love the SPY. I do think the SPY could break into new highs in the next several months. And we'll talk about some of the hiccups that could happen along the way. But the picture right now is looking like we're going to have a massive bubble in America, in not only equities, but also the bond market. Okay, so let's take a look at some of the big information that we did review in the live stream today, and I'll open it up for Q&A. So China, I like to obviously buy the put options. We were able to get out of some of those last week for a profit, and you never know how long a sell-off will go. Our strategy essentially will play the downside as long as it's selling off, and once it starts to rebound, we'll flip the switch back to going long. And so we knew that the FOMC meeting is September 18th. and that they have this Jackson Hole meeting this week. And so that's why I've been wanting to go long the SPY, and that did pay off Friday for us. Monday through Wednesday, we lost like 10 cents, but we're going to continue betting to the upside. The only thing I think can derail the bull run in the SPY right now would be trade tensions escalating. And so that's the wild card that we have to keep a careful eye on. The Chinese have said that they will retaliate from the tariffs on September 1st and again on December 15th. So we have this very bullish news coming out from the Fed that they're going to most likely lower rates, which helps drive equity prices higher. The bond market is no competition in the long run from stocks because they have almost zero to negative yields around the world. 95% of all the positive yields are all out of the US now. So if you're buying a bond for what you usually buy it for, a safe income stream, there's not a lot of options to do that. Now in Germany, you pay them for the right to loan them money. It's complete nonsense. And so we'll see how much longer this bond rally can go around the world. But the risk is that all of a sudden everyone sells that and floods into the US equity market. So that's why we really want to have that SPY position a little bit vulnerable right now with a wide collar, because I am expecting some big moves to the upside. So right now our SPY trade, we're not trying to get a lot of profit from the calls or be too protective with the put, because I want the actual asset to generate the return. Once we get to nose bleeding levels on the SPY, let me pull up the chart of the SPY. So as soon as we've broken well above 302 is when I'll really tighten that collar up on our SPY trade, and we'll start generating profit from the covered call instead of relying on the SPY to go up. So that's really what I'm expecting. And again, the wild card is just how aggressive will China retaliate. When we put out the news from Trump about the tariffs, they immediately devalued their currency, which I'll pull up that chart. So we can see the conversion rate from the Chinese currency into the dollars at the weakest it's ever been in the last 6 years. Probably all time, actually. And if we go to a smaller chart, you can see that was their immediate response. If we're going to raise tariffs, they're going to devalue the currency. And that did cause a market sell-off. But is that a done deal? Or will they really add some aggressive retaliations? My expectations is that they won't. The Chinese are just trying to take these punches with as little impact as possible and keep doing what they're trying to do, which is their Belt and Road Initiative. I think they're happy at this point to slowly decouple from America, continue their closed system, and try to take over all the territory in Eurasia, which is a huge landmass. It's something like half of the world's population in that one little area. It might be more like 2/3. And if they can accomplish that, they really won't need the West to continue thriving. And on the other side of the coin, it looks like the US is happy to decouple from China and move all their manufacturing either to the US, Mexico, or South America. So I think we're going to end up with a very polarized world where we have China as the main hub in the East, dominating that entire region, using their proven system, their closed system, where they're happy to go steal everything they can get their hands on, replicate it, and hog all the profits, suck profit out of the world, and then have a closed system for their economies. Now, the open systems, the democracies are starting to realize they're getting ripped off, and they're starting to shut out China. So depending on how messy that gets, this could either just cause a huge bubble in asset prices where we see stocks and bonds and gold all fly up until inflation puts an end to the party, which could very well be what happens. Or we could see these two start to take some pretty serious jabs at one another, in which case, look out below in equities and hang on to your bonds and precious metals. So it's really hard to predict exactly what's going to happen with that. One of our best indicators for the US equities, besides watching the earnings, which continue to be very strong, is this particular ETF, LQD. This is the investment grade bond ETF. And so one of the biggest buyers of US equities for the past several years, and it's accelerating, it's not deaccelerating, it's accelerating, are corporate buybacks. And they're doing it primarily by borrowing from the bond market. So they're borrowing money at extremely low rates, and then they're buying back their own stocks. So it's complete madness, but as long as this trend is intact, it's hard to stop. And on the other part, the US government, if we go to the TLT, the US government's in the same scenario. They are able to borrow for next to free at almost an unlimited quantity, because it's the only positive yielding product that exists in the sovereign market. We have 95% of all positive yielding bonds, which if you think about it, it's insane. $16 trillion in bonds now are a negative yield. That means $16 trillion worth of investment is paying for the right to loan money to broke governments. It's absolute madness. And as long as this trend continues, I expect the US government to continue having huge deficits, which creates a lot of flow into the economy, which keeps our GDP numbers good. It keeps our retail sales strong. And so I think that the US government is on track to expand its deficit, get that $1 trillion infrastructure project in, and without a major conflict between China, it could push equities prices much, much higher. So the TLT is a great chart to focus on. If we saw the TLT crashing or LQD crashing, that could be a sign that the credit market is cracking. And that is, of course, how we're keeping the equity market afloat. The government borrows tons of money, pushes it through the economy. All of a sudden, your corporations have strong earnings at the cost of the government going into insane debt. And in the same note, they're able to borrow for cheap, next to free, and buy back their own stocks or fund projects that maybe don't turn a profit. So trying to predict the end of this cycle will be difficult. Another thing to watch out for is inflation, but that's still not a problem. In fact, we're having disinflationary problems around the world. So that is why this allocation right now is really smart. If we kind of look at the potential outcomes, if things just slowly cause problems worldwide with just slow little tariffs that aren't completely disrupting everything, but they're putting pressure on the rest of the world. It's causing capital flows to go to the US bond market and the US equity market. Then we could see all of these assets just go up together. Now, if things get too painful for China and they decide to blow up everything and retaliate and get aggressive, then I think we could see equities quickly fall and bonds scream up to 0% yields and gold really rally higher. And so this could happen in a flinch if the Chinese decided to get aggressive. Or on the other hand, if Trump decided to get overly aggressive. Now, on the other hand, if China decides they can't take the pain anymore, it's not worth losing Apple, for example, and tons of different companies that are manufacturing, they decide to buy some farm goods. It could be as simple as they decide to buy some farm goods and Trump de-escalates the trade war. Well, then all of a sudden you might have a freak out in the bond market, in the precious metals market, and a huge rally in equities. So right now, this allocation makes a lot of sense. If you diversify your trades and hold these assets, if no matter which outcome hits, we're pretty well balanced and can take it. Plus, we have put options below the SPY and we have put options below the TLT. So in the event of something crazy happening in either direction, we're not going to take a big loss. So that's our current allocation recommendation with that. Let's take a look at some other charts. The other big potential problem is Europe and Germany, specifically the Deutsche Bank. So let's take a look at that chart. Deutsche Bank has been laying off people, trying to clean up their books. Perhaps they'll be all right. ECB is supposed to have, quote unquote, a bazooka of stimulus coming, which is going to potentially be trillions of dollars flowing into their debt markets, trying to support the banking system. And we're seeing the ETF for Germany continuing to struggle. The other big bank that you can get access to with European ETFs is HSBC. A lot of drama coming out. They had pretty good earnings, but nonetheless, they're firing top heads left and right. So there's a lot of drama. There's been some rumors about their involvement with China and that relationship breaking down. And so you can see quite a sharp sell-off in the last month with a lot of buying. And so again, if we were to see any major trouble with Deutsche Bank or HSBC, that could spell systematic trouble. Think of Lehman Brothers. So those are two big banks I'm carefully watching. And of course, they are showing signs of weakness right now. Any questions at this point before perhaps we look at each track record individually?
Actually, I did have a couple questions. The first one was from the beginning when you were saying about if you miss, if you're traveling, because obviously I do. So did you mean to put on exactly the same trades, but just push out the expiration on that?
Yeah, so if you want, now here's the downside is, you may make a little less money, but yeah, if you wanted to say travel until, let's say next Friday, you would say, okay, instead of having the expiration on the 23rd, you can just put it to the 30th. So I'm going to have a pretty big view of where I think the asset's headed. And so if you don't want to trade 3 times a week, but maybe you just want to trade once between now and next Friday, then just push your expiration till your next trading date. And with this trade setup, we have absolute protection with that put. So that's what's so important. So the trades definitely work for, I would say within a week time frame.
Okay.
So yeah, feel free to do that if it makes your life easier and you don't want to miss out on making some income.
Yes, yeah, I was debating a lot of that in my own head, trying to figure that out, going, well, what would I do? Would I just sell the cash and just wait till the next trade opportunity and go back in like I'm starting over again? I wasn't really sure. So I guess this is definitely an option. Okay.
Yeah. So just push the expiration.
Okay.
The tightness of the collar is really what I'm trying to calculate, and the overall direction. So
okay, thank you.
I really only have a couple concerns. I think September 1st, there might be some volatility because of the first round of tariffs increasing. And China has vowed to, quote unquote, retaliate. But I don't think they're really trying to fight back. It seems like they really just want to take the punches and as quietly as possible, continue business, outlast this trade war, and build their Belt and Road Initiative. And if it means losing America as a partner, I don't think they care. Because the Communist Party does not want to give up their control. They don't want to give up their advantages. And And so I think that they're going to have to break away.
Can I suggest something else to keep an eye on when it comes to China?
Sure.
Taiwan.
Oh yeah, so we just sold a bunch of fighter jets to Taiwan, which they also said they're going to retaliate.
Well, because the United States still has our treaty to protect Taiwan, so it should be interesting. That's
Yeah.
why I've been watching Hong Kong very closely because of that. So yeah, but Taiwan, we have an old treaty that's still intact, so we'll see what happens.
Yeah, absolutely. Now, China really can't compete militarily against America, so it seems like their best bet is to really just try to
They're waiting it out. Yeah.
look strong. They need to look strong to their people. They need to keep all their workers busy and with food on the table. And if they can do that, they can slowly get rid of America as their number one customer and build their Belt and Road Initiative and do just fine. They have, I got to look it up. I think it's either half of the population lives in that area or 2/3. So it's just this huge amount of potential people to do business with. I just noticed Anthony joined. Anthony, I unmuted you if you want to talk or have any questions. Ernest, you got any questions yet?
No, I'm understanding so far.
Okay, cool. Now, are you just trading the SPY right now, or are you trading the whole program?
Just trading the SPY.
Okay, cool. Are you considering allocating it kind of like how I've outlined up here, or you think you're just happy with the SPY?
Yeah, I'm strongly considering it.
Yeah, because if it just depends on what happens. If everything stays just like it is right now, most likely all of these will go up, and the returns might look pretty similar from each strategy. But if the trade war escalates, we do profit on down moves on the SPY. The catch is that our program will react rather than predict. So on the SPY, you've noticed, as the trend goes a direction we predict, we rack up nice profits, and then we get the sudden tweet that surprises the market, and then we have to react to that. But if you have your TLT during that change in direction, the TLT makes up for the surprise. And the same goes in both directions. So yeah, definitely worth considering. Now, you have any precious metals?
Tiny bit.
Tiny bit.
I mean, like way smaller than you're recommending.
Yeah. So yeah, it just seems like unless we really think the governments want to get rid of all their entitlement programs, slash Social Security, get rid of all the pension promises, who's going to vote for that? Nobody's going to vote for that. So it looks like there's really only one option, and that's to print more money. So that's why I like that gold position.
Hey, Jason, how do you calculate if you have physical gold into this equation?
Well, what is it? It's $1,500 a pound. So this is
An ounce.
300 grand. I'm recommending you have $7,500 worth of gold and $2,500 worth of Bitcoin. So I had the precious metals portfolio being a little more complex, but I don't, after really, what I found our members really enjoy is simplifying their assets so they don't have to pay attention to as many things. So now we have this boiled down to 5 securities that you have to really watch. And as little as 4, and potentially as low as 3. If you wanted to really simplify your life, you could get rid of the Tuesday trade. You could push this up to 200. And if you really wanted to, you could get rid of the Bitcoin and go to that. So if you really wanted to have just 3 things that would create a weatherproof portfolio during a US-China trade war that could last years, it could be as simple as that right now. Now, I think we have a couple months of strong profits in the equities market. So that's why we're a little overweight on equities right now. And that's after we finally got past what I was expecting. I was expecting since June, Trump would raise the tariffs and create a sell-off in equities. So we were early for sure and had kind of a flat period of time in the SPY. You can go look. You can see I lost money in July on the SPY because I thought the tariffs would go up in July. We didn't lose a lot, but we lost a little bit. And it hit. We were right. We were just a little early. And we didn't lose a lot, but we lost a little bit. And now I think he's going to avoid ruffling the feathers now because he already laid it out. Tariffs go up September. They go up December. Then he can brag about all the billions of dollars he's pulling in. The question is, will he really continue to escalate it into 2020 and risk putting the whole world in a recession? So right now it's worked out beautifully. He's managed to create huge debt in the US government and fund it at extremely low interest rates. And the plan is to get this huge $1 trillion infrastructure plan going. So that will continue to boost the GDP. And if we're borrowing at next to free, then who cares? Who really cares? Let's refinance all the debt at 0%. So yeah, I think the catch is the market's become extremely sensitive to negative news related to the US-China trade war. So now if you want to be a little spicier, we go like this. So for those of you who did follow the precious metal portfolio, let me just pull that up. So precious metal portfolio, and this is also neat. This is a new add-on I got added to our summary tab so you can see the monthly return on each strategy. So if you combine them all, it's been pretty rock solid. July was definitely our worst month with a negative 1% return. The precious metal portfolio has been pretty incredible. Now, I do want to note, if you look at this view, it reports 100% ROI, but that's been diluted because I've been adding more capital to this portfolio as the big picture has become more clear. So in December, we had a tiny position in Bitcoin, and all the central banks were saying they're going to continue tightening into 2019. Now, of course, that was met with a very ferocious sell-off, which is now known as the Christmas massacre. And quickly after that, the Fed went from saying that hikes were on autopilot to rates are good to, oh, we need to lower rates and stop QT. That was the last meeting. The next meeting we're expecting probably a 50 basis point cut. And if it's really dovish, maybe 75. So if all the central banks are stuck where they have to essentially support their government debt, print money, lower rates, we become more and more bullish on this. So I'm going to get rid of, in the next update, I'm going to sell SIL and GDX and put it all into GLD. I'm going to sell my altcoins and put it all into Bitcoin. I really want to see probably GLD get into the 200 to 250 range and the Bitcoin to get into the 20 to 30K range before I think people are going to start looking further down the road and starting to speculate that we need the miners and we need the altcoins. And so that makes it a little bit easier for you guys to accurately follow our total strategy.
That's pretty aggressive. What kind of time frame do you think it'll reach those heights?
In the next 12 months.
Fantastic. Okay.
So yeah, I think that, I think it depends. Now, if they escalate the trade war, then I think it could happen very quickly. And so if the trade war escalates, I would expect the SPY to sell off, the bonds to skyrocket, and the gold and Bitcoin to skyrocket. But we've seen they are slowly drawing out this trade war as elongated as possible. So we may not have any major escalation in the trade war for the remainder of the year. Now, if we do, we have the right allocation to, not to end up in a situation where, we're on the wrong side of the trade and have too much risk. And that's why this overall strategy right now is pretty strong. So yeah, we'll see. It's very interesting. Do the Chinese think they can put the U.S. in a recession? Do they want to do that? Or do they want to just sort of mind their own business and try to build their Belt and Road Initiative and minimize the cost of losing America as their trading partner? And meanwhile, they got the Hong Kong situation and they have the Taiwan situation. So it's hard to predict. It's very hard to predict. It's a lot easier to react to what does happen and to have a smart allocation with the current circumstances. So I think this is a very smart allocation right now, especially considering we just got through what we expected, a little bit of an escalation in the trade war. So that created the sell-off. So that's why I'm a little heavier on the equities right now, and but not just all in on equities. And if anybody does want to make sure you get all of our trade alerts, this also goes out to all our recorded members. So I know it's just a handful of you guys on there now. We do have a lifetime deal. So call Dean, 505-322-7515. You can get all the trade alerts instead of just the SPY. So yeah, let's take a look at some of the other big news. So GE is one of the stocks we're looking at, not because I want to trade it. Now, Stanley Druckenmiller does have a position in GE. He bought the dip. There's a big accounting scandal. Same guy who turned in Bernie Madoff is leading this hurrah. Of course, he's getting paid to do so, so it's questionable how accurate it is this time. But they have the most BBB graded debt that could potentially cause that LQD ETF to crack. So definitely something we're closely eyeing. In terms of the trade war, unfortunately, there's no sign that they do want to end it. So that's why I like our current allocations. The important interviews that I saw yesterday that give us some hint are in the live stream. If you do go to the daily live stream, guys, I have all this content. You can click on it, and I pull out the best videos to watch, which I'll jump down to.
Trump's tweeting as we speak, so it's almost like you need to add a few things.
Oh yeah, let's see. Yeah, who knows? So yeah, so he had 2 interviews yesterday. The more interesting one was at the Oval Office. I don't have that link up here, but he was going on for like 10 minutes about how the last 3 presidents didn't do anything about China, and he's the first one to do so, and that he doesn't want to do it because it's holding back the stock market, but he has to do it because it's the right thing. And so it doesn't look like he is going to remove any tariffs. Now, it's not necessarily sounding like he's going to escalate it beyond what he's already done. So that's one cue from that. And then Mike Pompeo came on talking about how dangerous Huawei is. Looks like there's really no end in sight to taking down their big telecommunication company, Huawei, which I know is very problematic for China. So the risk of China retaliating is certainly high enough to not have an allocation where you don't have the TLT and the gold. So I think very critical that you do have that Thursday trade and gold position right now. And I'd say the big if is if we see the Chinese considerably purchase agricultural products, I think that would be the sign that trade tensions are going to really ease. And that's when I would be very concerned about bond prices and gold prices right now. So we'll see. That's the main card I could see China being able to play that would convince Trump to ease some of the tariffs, maybe make some sort of deal with Huawei, let the guy's daughter off the hook, who knows? And this would help Trump win his election and help him with all the farmers. So I'd say that's probably one of the biggest things to follow. And then on the other side is the Chinese are becoming very aggravated with controlling Hong Kong and Taiwan. So if they don't feel like they can control Taiwan and Hong Kong, because that's key and critical to their whole project, then I could see this escalating. And if this does escalate, I'm not going to sell the SPY shares. We're just going to flip that collar upside down like we did for most of this month. So we'll let the TLT run to the upside, let GLD run to the upside, and we would switch out the Tuesday play to be long silver instead of Facebook, and then flip the collar upside down on those SPY shares. So if everything just kind of remains how it is, China doesn't really punch back hard in September or in December, Trump doesn't escalate anything, just lets this new 10% tariff kind of ride in, I think that everything's just going to keep bubbling up. So that's sort of my read on the markets right now. Any other questions, guys? Has anyone been able to join any of the live streams or been watching those daily videos? They're about an hour long every day.
I'm glad you mentioned that. I did one time, but I haven't figured out how to comment without necessarily having myself, since it's open to everybody, I don't really want my name all over the place knowing what I'm doing.
Oh, okay. Well, yeah, no worries. Yeah,
I'm
I'd suggest you guys download the YouTube phone app and then make sure you're subscribed to the channel. And then it'll automatically pop up when we're about to go live. And it'll also send you a recording, so you can kind of get that easily. Oh, cool. Jerry's been watching them. Jerry's been a master of our content for quite some time, so thanks for all your support, Jerry.
You're welcome, buddy.
What are you trading these days, Jerry? I know he doesn't actually take our trade alerts verbatim. He kind of, and that's fine. You could actually be greatly outperforming our returns if you took the trading ideas and got rid of all the protective options around them.
I'm just kind of holding some silver, a little bit of Intel and Bank of America and the VXX.
Okay.
So it's kind of balanced out.
Nice. What about you, Ernest? What have you been doing so far? Just the SPY?
Yeah, that's all your stuff that I've been doing. I also do a lot of trading with futures, but that's not related to you.
Okay. Cool. So how many shares of the SPY are you trading right now?
Well, I don't think I want to say right on the public.
Oh, okay, yeah, my bad. Yeah, no worries about that. Well, guys, I think that's a pretty good overview. Are there any other questions?
Yes, actually. One more question, just out of curiosity. Only because of some stuff I was doing prior to following you. As opposed to holding the actual shares of stock, have you ever just considered doing synthetic, using options that way? So this way you don't have to put up as much capital and maybe you can go a little further. And I know this is more of a slow growth type of thing, but I'm that in-between person that's still looking for some growth. So I need protection with a little growth. So I was just curious of your thoughts on that.
Sure. Well, yeah. Um,
I know, not now. Thank you. I think I answered it myself.
well, I'd say we're delivering some pretty good growth. I mean, we made 15% in 9 months. That's pretty good growth. What kind of return are you trying to hit? What I would suggest, if you want to increase the return,
Uh-huh.
go to Interactive Brokers. They will give you a tremendous amount of collateral or of margin.
Okay.
And so this is a safe system. I mean, our strategies typically, our worst month is -1%. So I do have members that realize this, and so they're, well, if I can make a safe 1% return, well, if I double the allocation size, Interactive Brokers is loaning out capital at like 4% a year. And I
Okay.
think they're giving people almost 4 to 1. So, if you did want to ramp up your returns, I wouldn't try to use synthetic options because they just don't work that way. The benefits of this strategy all revolve around owning the asset and not revolve around spending money on options,
Okay.
So yeah, if you want to double the return, I mean, you could be up 30% and only owe 4% of half of that to Interactive Brokers right now, just by doubling the position size. Now, I would say if you do start to go using margin, that you really want to make sure you're following the overall strategy, because
Right.
there's a lot of unpredictable events that could cause either the bond market to take off and equities to crap, or vice versa. Right now, we're in a nice situation where really everything should float up together. But if the trade war escalates, look out below on equities. And good thing we own our bonds and our gold. On the other hand, China simply buy some farm goods. Who knows? That bond market could have a serious sell-off. Same with precious metals. And it seems silly that a little farm purchase could make a little agricultural purchase could make the big difference right now, but it really could. So that'd be my suggestion. Yeah, trying to do this synthetically, you're going to be paying for time premium, and you turn these trades into like a directional spread, and all of a sudden your risk reward is completely different. It becomes much more aggressive.
Gotcha. Okay. I appreciate the explanation. Thank you.
But yeah, go to Interactive Brokers. A fellow I was talking to had something like 75K in there, and it was telling him he had $400,000 buying power. So,
Oh my God. That's almost frightening.
yeah, exactly. So, with a spread strategy, that'd be ludicrous, but with a collared, we got the best assets. We got the SPY, we got
Right.
the TLT, and then we've got GLD. So, I mean, with 3 ETFs, you're set for the rest of your life. If you can just get the big picture right, and then throw those collars on it to provide the safety.
Very good. I appreciate that explanation. Helps to keep my head straight. Thank you.
That's a popular question. Everybody wants to synthetically rebuild the trades, and I mean, half the time, our biggest gains are just letting the SPY go up all on its own when there's been a big sell-off, like we had from Friday to Monday. Any last questions? All right, guys. Well, hey, another great webinar, and I think we're getting a pretty nice flow. I really hope you guys can check out those daily live streams. I was having to cut off my content when I was pre-recording the videos, which I hated to do because I wanted to go into the news and the macro view and spend a lot of time talking about it. So there's a lot of great content in those. I'm not revealing the trade alert that is current in the live stream because it is free on YouTube. So I'm mostly just reviewing all the previous trades and the big picture. And that way we do protect the private content. And that's a wrap. So thanks again for everyone's time, and we'll see you next week.
Thank you, Jason. Thank you, Karen. Thank you, Ernest. Appreciate your time.
Thanks, guys.
Yep. Have a great day.
Thanks, guys.
Bye-bye.
Thanks, Jason.
Thanks, Jay.